What is going on, everybody? So today it is a beautiful, beautiful Sunday, and today I'm going to be going over a little bit of my strategy and how I trade the markets. This is going to be a longer video, but I did get a comment on one of my previous videos asking if I go in a little bit more explanation of how I trade. And so let's get into it. This first, I guess, example is the PDI model that I trade. Now, all three models that I'm going to show you today, I've learned off Patty, Blake, and Ronan. These guys have taught me pretty much everything I know. They're the GOATs. And it is essentially their strategies. I have my own little twist on it with what I like to personally see. Just like any other trader, you take a strategy, throw your little twist on what makes your discretion your discretion. But let's get into the PDI model. All right, so the PDI model, also known as the AMD, is pretty simple and pretty self-explanatory. It's very much how the market moves, and you can see this happen on higher time frames, lower time frames, and there's definitely different variations of it. So first, I'm gonna go over just the raw kind of details of it, and then I'm gonna show an example on the charts, and then I'm gonna show a trade that I've taken with this strategy. All right, so first off, we have our accumulation zone. This is basically when the market is just chopping sideways and accumulating in price, right? So it's just building up price. So we're building structure, building up price, and we're accumulating. Then we have our manipulation. And what makes a manipulation move a correct manipulation move? Well, we know it's a correct manipulation move when it hits a key level. So this key level could be anywhere from a 1 hour gap, a 4 hour gap, an internal high, internal low, 15-minute gaps, 30-minute gap, even 5-minute gaps if sponsored. That's a little bit more of a different kind of video. But for this case scenario, let's just say this is a 1 hour fair value gap. So we manipulate, we hit this 1 hour fair value gap, and then we have our distribution. And then our distribution is just, us going in the way that we think it's going to go. So if price manipulates like this, and then we go higher into a key level, we can expect a distribution lower given context of high time frame narrative, all that kind of stuff. Like I said, this is just the bare kind of minimum of what a PDI AMD model is. So when do you know when to get in on this move? Well, the way I trade, I'm very condition based, so I want to see gaps get respected and disrespected. When we hit this key level, this 1 hour fair value gap, I want to see this get respected. And how will I know it gets respected? Okay, this may be hard to see, but I just drawn a blue fair value gap. So this blue fair value gap is going to indicate bullish structure, right? We're going higher in price, so we're going to say that as blue. That's why this key level is red, because it's a bearish mark of a key level. We're hitting a bearish key level. We're hitting a down candle that's created a bearish 1 hour fair value gap, and we're now trading off of it. So what I want to see is this fair value gap get disrespected. And once this fair value gap is disrespected, that's when you are safe to assume that your stop loss is protected, you have your entry, and now you can target your draws, either accumulation lows or whatever further draws you have below. So as you guys can see, I am now reversed here, and instead of taking a short, we can now see that we've manipulated lower, and now we're distributing higher, right? So my entry would be a inverse of a bearish gap. So you see that this is in red because it's a signifying bearish key level, a bearish 1 minute, 2 minute, 3 minute fair value gap. Once this gap gets inversed, I can then take my entry and target my draws. Now that you guys know what a PDI/AMD model looks like on the bear structure, let me show you a trade that I've recently taken that I would classify as a PDI AMD model. Okay, so this is a trade out of my journal. I'm going to go over it real quick on the picture that I've taken to put in my journal and all the things I wrote down, and then I'm actually going to play it in the live markets as well. So I had a bullish bias coming in the day, so I was looking for longs. We had a 30-minute and a 15-minute gap I wanted to see get hit. We hit it, then we formed AMD structure, like I just said, when we had the bare minimum. What are we looking for? That AMD structure, accumulate, manipulate, distribution, so that PDI trade. We had a 1 minute IPG, so that was my disrespecting that price, that the bearish price that came into the gap. We then disrespected it, and then we had draws above. We SMT'd with ES, which that's more stuff I can go in on a later date. Took my profits early once ES took my draw. 15-minute candle, respecting heavy. We stack S&Ps and ES, very textbook A+. So what do we have here? Well, we have this, we trade lower. And what do? We accumulate, we chop, we accumulate. Then you can see this clear manipulation leg. Then we have a clear inversion of this gap right here that I'm circling with my mouse. We inverse it with that candle. You enter. You can target your 1-to-1 or target your full buy side liquidity. I ended up just taking my profits because you can see that ES took out my draw. So let me go into the live markets and play it out for you. All right, so here I am. I'm going to play out some price. We have our key level marked out so you guys can see when we hit our key level. Our key level is this 30-minute gap here that we formed. We're in bullish structure, so I'm waiting patiently to see that get hit to then catch my move. You can see that off open, market opens here. We do a bunch of different stuff, right? I'm waiting for my key level to get hit because that's going to be my highest probability trade, okay? So we hit my key level. Now, I'm not instantly entering a trade. I want to see structure build. I want to see something form to then take a trade. And look what happens. We accumulate, right? So when we're doing this accumulation, I'm sitting here thinking, okay, perfect. We're going to get a nice long here where I can target buy side. I can target my 1-to-1, whatever it is. I'm sitting here waiting patiently for price to do what I want it to do. Okay, I want price to accumulate and then manipulate, which we then get, I think, on this candle. Nope. Okay, boom. Now you can see clean manipulation. We see a kick in volatility, right? So we had chop, and now we're having a good, strong push, and now we're re-sweeping this low within this key level. This is telling me, okay, we're starting to make our move. So now we print this gap right here. Boom, 1 minute gap gets hit. I'll put it in red because it's a bearish candle. So now all I want to see is this gap get inversed, and that's my entry to take my long. This is a very, very, very simple A plus PDI model. What happens? We don't inverse it yet, but then we do. That is my key, that is my leg. Okay, we're ready to go higher. That's your entry point. You enter. You put your stop at the swing low because that is your protected low. And let's just say we're aiming for a 1-to-1 just to get our 1-to-1 winning day. And you can see that this flushes out in 3 minutes. So super A plus setup. That is the PDI model. So let's move on to the MEC. All right, so let's get into the MEC model. First, I do want to say this. You're going to see a common theme in all of the ways I trade with my 3 different kind of models or strategies, as you can say. They all really require a AMD model, an accumulation, manipulation, and distribution. And all of them, no matter what, have a manipulation leg because that's how I know that we are ready to make our move in whatever way I believe price is going and whatever way the markets are telling me the price is going to move. So today, you're going to see all of that. And in this model right here, you're going to see a bit of that AMD model that I showed previously, but it's a little bit different. So all a MEC model is targeting unfilled gaps. That's literally what a MEC model is. It's more of an external to internal kind of trade. You'll see in the next trading kind of strategy, you can say, or next model, it's a continuation trade. So it's internal to external, where this is external to internal. Okay. And the PDI structure could be any of them. And that's why you're going to see it within this model. So let's just go over what we have on the screen. So we have the same kind of key level, 1 hour fair value gap. We have a manipulation leg right here, and we have our distribution leg right here. But I want you to spot the difference here. Our accumulation leg, it's not so much sideways, right? Like that first kind of thing I showed you, right? Can I move this all over? Perfect. We didn't do this where we went sideways. Instead, we went went more vertically. We went higher up, creating all these lows, which we like to call low resistance liquidity. Now, the only thing that makes it low resistance is the fact that it's not like hitting a key level, which will make more sense when I tell you about our entries a little bit more. But we create this low resistance liquidity leading up to this 5-minute unfilled gap. Okay, so we have a 5-minute unfilled gap. We have price slowing down, and we're starting to accumulate price, slanting liquidity. This is slanted liquidity. And then we have our manipulation into our key level, and then we have our distribution back to that unfilled gap that we previously marked out. That is literally it. That is the MEC model. So it's literally AMD but your target is a unfilled gap. Now this gap could be a 15-minute, could be a 30-minute, could be whatever, right? Like it's just targeting that gap. But what you really want to see when you're taking these kind of trades is low resistance liquidity leading up to the unfilled gap, and then a manipulation like into the key level, because that's going to give your highest probability within these setups. So let's now go into a trade that I've recently taken or taken in the past, so I can show you in real time what it is, and then I'll do the exact same thing and show you it on the live charts and talk you through the trade. All right, so let's look at a MEC model that I have taken in my trading career. Now this MEC model doesn't have all that LRL, really super clean LRL, but this has everything I needed to see. As well, we created low resistance liquidity off of open, and that's why my TP was a lot lower than the 5-minute gap, because I believe that we were going to go lower and not just stop at this 5-minute gap, especially because it wasn't sponsored. Now that's like some more sauce that can be a different video, but for this video specifically, you can see, okay, this will be your entry, that we have our key level here. So our key level in this trade was a 15-minute internal high and a 15-minute gap. We did also SMT some highs. Now that is also more sauce that I can put in a different video. But for today, we hit our key level, which makes this high protected. And then we had our inversion of this gap, right? We wanted to see this gap get inversed, right? This bullish signature in price. Once that gap got inversed, that is your entry. And then you can target this 5-minute gap. And I targeted these lows. And then you can see how this trade comes up, retests these highs. You can see that because we put our stop loss at this one high, we stay in this trade, and you can see that this high is protected because we don't resweep it. And then you can see that we then flush lower to our full TP, and we even go lower to these lows down here. And yeah, but you can kind of see how we manipulate. Now our accumulation period's more so here, off open. We accumulate kind of here, and then we have a little bit larger of a manipulation move higher, right? And then we then distribute lower, right? So that's still that AMD kind of model, right? You can kind of see it on the higher time frame. What do we do here? We accumulate, and then we manipulate, and then we distribute, right? So higher time frame, we have this PDI, but internally it's a MEC, right? So we're piecing all these things together to give us the highest probability setups. So that was a MEC model in the live markets. Now let's move on to our last model, the continuation model. Definitely the easiest model to spot, just because it's simply just a continuation of a move that's already happening. Let's get into that. All right, so now that we're done with the PDI model and the MEC model, let's get into our continuation model. Now this is super simple model, and this is kind of one of those things where if there's no entries off your key level, we can then still get a trade off of the full move called a continuation. So let's say that we trade lower and we hit our 1-hour key level, and we don't really have any MEC off of this, any PDI, and we just kind of react off of it and we trade higher, but then we create a 5-minute gap. Now this can be a 5-minute, 15, a 30-minute, but let's say it's a 5-minute gap, and we get a little bit more of an expansion higher, right? We create this 5-minute, we leave this 5-minute behind, right? But then we start trading back lower, and we start generating structure. Now this would be our accumulation period, and then we get our manipulation into this 5-minute gap. We inverse that, whatever 1 minute, 2 minute, 3 minute, whatever it is, we inverse the bearish signature in price, showing us we're ready to go back higher, and we just take that continuation trade. So instead of getting an entry down here, right, like this, right, we're now just catching the entry here. And this is our stop loss protected, and we target our draws of liquidity, right? So now let's go see a trade that I've taken in the past, because that is pretty much it. It's very simple. The main explanation really is that AMD at the beginning, because it's in all of my setups, but there's just little twists, like I said. And so yeah, let's go in the continuation model. Let's go find a trade that I've taken and go over price. So now let's go over this Kant. This is a very good trade that I've taken. You can see that we have this move lower. We create this bearish 5-minute gap. In my description, 5 minutes sponsored by the 15, 30-second IVG, data lows, and lower to target low resistance liquidity, right? So we open up this gap while we're trading lower. We then trade higher. We generate lows, generate structure, hit this gap. We get an inversion, and then we trade lower to our full TP. We also were targeting a data low here. This looks like I caught like, I don't know, maybe 1 to 3 RR. All right, so let's get into the live data and how I took this trade. Now, this trade or this trading day is actually about to show you guys a lot of what we just talked about in the previous two models, right? So we have this high time frame accumulation, or just accumulation over a longer period of time, and we have this 15-minute key level. Now, when this 15-minute key level is there, I'm looking for that to get hit off open to then trade lower, and you can see that that happens. We get a trade higher, and what I mean by that was we trade higher, hitting our key level, and what do? We react off of it, and there was this 2-minute gap that got created. Now, I want to see this 2-minute gap get inverse to then take a trade lower, and it looks like we kind of edge it, and then we have this big displacement, and I think I just didn't take this because of RR purposes, because it was like, we're going to take this low, my stop's all the way up here, I'd have to extend all the way like this, which we end up going there, but I was like, okay, I'm going to play the continuation now, so I'm not going to chase price, I'm going to wait for a better entry for me. But you can kind of see how we have this accumulation, manipulation, and distribution, right? Literally how it works all the time. We're not doing that. That is an AMD, that is a PDI model. We are looking at the continuation trade model. So what do? We trade lower. Look at this massive bearish price. And this 5-minute gap is going to form. So while I'm waiting for this 5-minute gap to form, what are we doing? We're generating this structure right here, right? So we're generating lows to our basically our TP, or our draw of liquidity. And now I'm just looking for a bearish confirmation. So we're disrespecting bullish price to get up trade lower. And in this case, sadly, I can't go to the 30-second time frame. This was a 30-second entry, but there was a 30-second gap within this that got inversed, and that was my entry. And then I took it to these lows, and you can see that this plays out. Okay, so that is our continuation trade model, where if you don't get a good entry off your initial key level sweep, you can see that we also don't take out this high because it's protected. We get a distribution, we create a sponsored 5, and then we react off that sponsored 5 as a continuation trade. Super A+ day. There's a bunch of trades within this, and that is pretty much it for today's video. I was going to do a bit of back testing, but just for time's sake and time of the video, this is going to be a pretty long video and a very educational video. Now, by all means, this right here is sauce. Like, this is good sauce. This is direct to like how I trade and all that kind of stuff. But there's so many other key factors that goes into my trading. This is just the models at the bare minimum kind of like level. And yeah, so take this all with a grain of salt. And what I mean by that is, this is how I trade. This is literally what I look for in my setups. And I showed you 3 setups that I've taken myself in the past and them playing out. But there's a lot of different key factors with ES, SMTs, like time manipulation, PO3, all these different key levels, or all these different key parts of how I trade that will be kind of like learned through multiple videos. It's so hard to put it all in one because there's so much trading sauce that I know that I want to give out to people for free. It's just, there's a lot. And plus, I'm not, out here to LARP. Like, I haven't even gotten a payout yet. So it's like, I also don't want to be telling people like, trade like this, like you'll become a millionaire. Like, first I got to get to that level myself before I can start saying that. And I know that, but I did have a comment on my YouTube video about a little bit more explanation of how I trade. So I wanted to make this video for the people that watch me. And yeah, so hope you guys enjoy this video. I put a lot of effort and sauce into this video. So please leave a like, subscribe, and comment down below if there's anything you need me to recap in a future video. I'll see you guys in the next one. Deuces.